Hey, good morning everyone. It's Monday, 7:55 a.m. and I'm about to go live and discuss some BTC price action. Let me first just get these links out and get these posted up. Let me see where prices are. Looks like prices are ticking up, 79, 75 or so. I don't know where my live link is. Let's see. Okay, I found it now. All right. And let me know if you guys hear this properly. If my sound is okay. I know last time we had some complaints, so I need to make sure that everyone can hear me fine. Okay. So let's do that. Let me post this up in a couple more places. Over here. Over here. My group. Let's see. Somewhere over here. Can't tell right there. There we go. How's everyone doing this morning? Let me pull up the chat too. So today, guys, I'm not going to be able to answer many questions. I really just want to get through the BTC analysis because clearly we're seeing some, good price action, good movement. So would love to just sort of get through that real quick and then have you guys sort of comment and maybe even join our Cryptosomnia community and share your thoughts. Okay, so let me get this up over here and over here. Oh, not this one, I think it's this one. Awesome. Okay, all right, so now that we have that done, okay, as we can see, prices are ticking up over the past hour or so. This is really the hourly candle. Still, we have about 2 minutes left. We went from a low of 76.40 or so all the way to a high of about 8,000. Okay, so the point is, what exactly does this big move signify, or is this another sort of fake out? All right, so let's sort of dive in and check that out. RSI is already coming close to overbought on 1 hour. With this big candle spike. Okay, so if we start zooming out a little bit, let me give you the bigger picture of where we are. Okay, so this sort of gives you a bigger picture of where we're sort of trending in terms of a sideways price action. Okay, so what I see happening right now is these lower highs, right? So this was the high right here, the 9,000. This was a lower high right here, created around 8,800 or so. Another lower high right here, around 8,100, 8,200. And now it seems like we may be creating another one right here. It hasn't been solidified yet, okay? But if this structure were to play out further, then I wouldn't be surprised if prices turn around right at this critical juncture of 8,000. So why do we see that? Okay, so here is another thing that may play out, okay? Here's your mini head and shoulders pattern. All right, so here's the left shoulder right there. Here's that head, right? And here's that right shoulder that may hit the 8,000 and play out perfectly, okay? The neckline currently stands around the $7,600 area that we've been hammering over and over again, okay? This area right here, the $7,600 area, clearly had a decent amount of support even from back here, right? This is the range that we were in when we were trying to break through 8,300. See, here's that $7,600 touch right there, touch right there, touch right there, and touch right there. Okay, so multiple touches on the $7,600 area. So clearly, this area is not going to break that easily, all right? And it's not a surprise because if the bulls are sitting around this area, they're absorbing all the supply dumped their way. But eventually, excuse me, the bulls will get depleted in terms of how much buying power they have right here. And volume is actually already giving signs of that, okay? I want you to look at this volume right here, okay? And look at the volume just dwindling down on the buy side, okay? Every time the $7,600 area was tapped right here, okay, and then right here, and then yesterday here again, look at how much lower the volume is each time. This is a clear indication that the buyers right here are getting depleted, okay? And at most, you know, we will tap it one more time, maybe bounce up just a little bit right here to 7,700 and then break through. Or what might happen is this is really your right shoulder, and then you're just about to rip through over the next, you know, 24 hours or so, okay? The one way, and again, I'm not saying that this head and shoulders pattern has to happen. By the way, for those of you who don't know the head and shoulders pattern, it's a classic technicals pattern that is a bearish pattern. It's oftentimes actually found on top of trends, not, you know, near the bottom of one, but it doesn't change the definition of the pattern. It usually, you know, still keeps the pattern active. But the point is that in this scenario, this head and shoulders pattern, you cannot ignore it because it does look like a head and shoulders, right? And for the most part, once the right shoulder is coming down, it hits this neckline. More often than not, the head and shoulders pattern have a higher probability of breaking to the downside. Okay, you can look this up on the Bulkowski website, Investopedia, any, you know, trading website. Now, the only way for us to sort of ignore or negate this pattern is if we start seeing, you know, multiple hourly candles close above this region right here. Okay, first things first, they need to close above 8,020 at best, and then the $8,130 level right there. Okay, why? Because this would then signify that this right shoulder is not being created, rather we're trying to take out this high right here. Okay, so once that high is taken out, then we can aim a little bit higher towards this previous resistance around 8,300, okay, which comes from this touch right here, this touch, and these touches right here. Okay, obviously we're not there yet. Maybe while we're streaming, who knows, we might get a big candle all the way to 8,300. But I'd be really surprised if that sort of happens right now, because we've seen so many touches on 7,600. I'm really surprised that, you know, we even had this candle spike. But this, to me, looks like more of a relief rally before potentially more continuation to the downside. But we'll see, okay? All right, so let's go to the daily chart and see how that's looking, okay? Let me pull that aside. Here's the daily chart, okay? Remember I said that, you know, if we start closing under this line of about 7,800 on the daily, this is a very bearish sign, okay? We did not close this day. We didn't close this day right here. Or actually, we didn't close this day, but we did yesterday, okay? This, to me, was really the big bearish candle right here. And this was essentially the reason why most of my trades were closed out on small losses. Now, everyone I know likes to talk about their winners and stuff, so let me show you guys losses, because I want to show you how we contain losses in our community, okay? So as you can see, yesterday in the morning, at least in the United States time in the morning, we closed all these positions right here at market prices. Market was not showing us any strength, and it kept hitting 7,600. You can see 4% loss, 4% loss, 1.7% loss, 4.9% loss, and then 4.3% loss. Okay, so all of these losses were fairly small, and again, these are small capital, right? 5%, 2.5%, 5%, 10%. Okay, so you want to be able to keep your losses small and contained, and keep your winners as big as you can. Okay, now obviously there's no way that I could have predicted this big candle spike that we're seeing right now happen. And for the most part, the technicals right here were supposed to essentially show more downside, but they didn't just yet. But that doesn't mean that the game is over, guys. You know, this could go a little bit higher, you know, towards 8,000, 8,100 over the next couple hours, but it could also come back and close much lower. Okay, it's only 8 o'clock in the morning. We have another 12 whole hours to go on this daily candle. Okay, so the best thing, in my opinion, is to be safe. wait for this daily candle to close, or at the very least, if you really want to sort of, FOMO in, maybe wait for a 4-hour candle to close above here. Okay, this is really the critical level that got us trapped right here in these positions. Okay, we didn't wait for a 4-hour confirmation. What we did was we waited for a 1-hour and 2-hour, and then eventually prices just got torpedoed down, right? But now we're seeing something very similar to this right here. Okay, so we need to see if prices can actually stay over this level on the 4-hour time frame, and this level is currently around 8,020. So let's just say 8,025 just to be safe. If prices close above this level, I will consider going long again, but for the most part, I would love to see the daily candle close above this level. Okay, I don't see anything else that has sort of changed in structure just yet, because honestly, I mean, we've still been trending down, guys. From this 9,000 high right here, all we've really done is just move sideways. Okay, and for the most part, I don't think you want to buy sideways right here after you've already dropped from 9,000 all the way to 7,600. Okay, one could make the argument that this was your first bottom and this was your second W bottom right there, and I would definitely agree, but unfortunately, from my experience, the W bottoms that I've seen created kind of go down fairly sharply, reverse, come back all the way to the 618 fib on the reverse side, come back down again with a decent amount of space and time, and then sort of rally. This really just more so looks like a sideways movement to me. So I can't definitively say this is a double bottom or a W bottom, but I mean, obviously on the 4-hour time frames, it's a little bit more pronounced, you can see. But then again, on the 4-hour time frame, it doesn't look like a W bottom. It's more so like a triple bottom right here, right? You kind of tapped it right here once, twice, and now 3 times in less than 5 days. So that to me is more bearish than bullish, because I don't see 3 taps like that created and then break to the upside that fast. Oftentimes your 2 bottoms are a sign, because here's the first bottom that was created with a sharp reversal. The bears press the prices down, the bulls reject it before it even comes close to that previous bottom, and then this is really what creates your W. Okay, that's really why the W happens, based on supply and demand between the bulls and the bears. This third bottom right here to me is a larger bear flag in play, and doesn't quite make me feel comfortable buying just yet. Okay, so certain levels to watch out for, right? All right, so here's sort of that big weekly chart that I've been talking about for so long. The monthly and the weekly pivot currently reside around, let me sort of zoom into this. Let me zoom into this right here. It's about 8,025, 8,050 or so. You can see right here. And remember that we just closed this weekly, guys, right under that critical level of that pivot. Okay. Not only do we do that, we also close it below the wick of this previous candle right here, and the body of this previous candle right here. So we took away almost 2 weeks of gains in this one weekly candle. Okay, and now remember, we're on a fresh weekly. Okay, so for all I know, we may have a rebound weekly right like this, and then potentially come down again. The only way to sort of tell that this weekly is negated is this current weekly needs to close above 8,025, okay, or 8,050 to be safe. So right around this region somewhere. But remember, weekly just started yesterday, so we have another 6 whole days to go. All right, just something to keep in mind, guys. On the daily chart, you can see that we're still sort of struggling at these levels, the critical levels that held these candles down right here, about 8,000. So this candle definitely looks like a bullish engulfing, but I would definitely like to see it close above here, so another 10 hours or so. One more thing that I wanted to show is the EMA 21 right there, which currently resides around 79.50 or so right now. I would say if this candle closes above the 21 EMA, I feel slightly more positive. But then again, this candle did that too. And then look, you know, the next candle, follow-up candle, brought two big candles down all the way, pulling prices down all the way to 7,600 again. So closing 2 days on the daily chart under the 21 EMA. Okay, here's the 30 EMA, which is also really unique for our perspective. Okay, so if we sort of dial back all the way to February or March using these 21 and 30 EMAs, the 21 is in the gold, guys, and the 30 EMA is in the red. People ask, you know, why are moving averages important, right? Moving averages give you an idea of where the average prices are for the past few days and if they're being used as a good amount of support. And if the average 21 or 30 days are, you know, being broken, or prices currently are surpassing those averages. Okay, in current circumstance, the 21 EMA currently is at 79.50. The daily candle is now currently above it, but like I just said earlier, we had done that 3 days ago, but then we didn't have any follow-up candle. Okay, we just kind of took two more big bearish candles down. Okay, so the point is that we haven't quite done anything like this on the 21 EMA since maybe way back here, okay, in February. Once we sort of started to move away from the 21 and 30 EMAs right here in February, late February, March right here, April right here, you can see we have not closed any single candle under the 21 EMA. I mean, until just a few days ago, right? So this is why when I look at candles like this, you got to be very careful, because this could very well be a big FOMO, you know, spike that will ultimately bring, you know, prices down even deeper. Because if you keep hammering away at the 7,600 level, you're eventually going to break it. And that's definitely what it seems like right now. Okay. So in my opinion, current prices look more bearish than bullish, or rather neutral to bearish than bullish. All right. So I don't see, you know, why this candle is that important right now, unless we now see the follow-up candle, which would be tonight at 8 p.m. in another 12 hours, showing more strength to the upside. Okay, so if you truly want confirmation, you want to wait above 8,050 on a couple of 4-hourly candles, or the daily as well, to be safe, and then the follow-up should show you some strength as well. But for now, I'm not seeing anything too courageous in this candle that we hadn't seen over here, which ultimately just got negated, right? So just keep in mind, all right? I wanted to show you guys something else. So give me 1 second. I want to find my charts over here. Let's see. Okay, XBT. Maybe it's over here. Here's that chart. So I like to look on different exchanges for prices too, because sometimes, you know, some exchanges have a slightly different structure. Here's the BitMEX exchange right there. Here's the parallel channel that we had. And I'm not trying to, you know, squeeze in the parallel channel. This is exactly how it was playing out anyway. It was sort of like this, right? Check this out, okay? We tapped the bottom of this channel right here. And if you watched my videos a few days ago, I stated that at some point I expected prices to go from here to the top right there, okay? This was around $8,200, $8,300 resistance right here, but we hadn't done that, okay? What we're really doing right now is we're just kind of moving in this channel right here. We tapped it once, twice, 3 times, 4 times, and now we're tapping it a 5th time, okay? And then after this, we may move down again to the bottom of this channel right here, around 6,800 to 6,900. Okay, I've stated many times that 7,200 is really the next big support, okay? It's around this, or where is it? This area right here on the daily, I think, okay? So I wouldn't be surprised if prices, you know, bleed or wick all the way down to 6,900s, and close at say 71, 7200. Okay, so just keep this in mind. And Ellipsis says, this is a big bull trap. I would probably agree that, this right here is a big bull trap. If you're talking about on the daily where this whole thing is a bull trap, kind of disagree. Well, I sort of disagree, yes, because, like I said, you cannot ignore the daily, guys. The technicals on the daily are very clear, and they're telling you that in the short term right now, we definitely do not look healthy at current prices. We've seen this sort of fake out earlier when we tried to break above this 21 EMA that I showed you, right? This 21 EMA, and then got torpedoed down, okay? Same thing might happen on this daily candle unless the follow-up daily truly breaks out and breaks above this critical area right here, which was, resistance right there, right there, right there, and then we had a big breakthrough, used it as support, and then broke down, and then over here we came pretty close to using it as resistance again. So really what we're doing is we're trapped between this area right here. Let's see, let me see if I can draw like a line right through it. Okay, that's the area that we're trapped under, and this area right here. This is really our trading range right now. Okay, at least on the daily chart, it's far more clear that way, right? There's another thing I think on the daily or the 4-hour chart. This one is a little bit more visible, I would say. Let me find that chart real quick. I think it helps to understand why on the 4-hour time frame things look more clear. Here's that chart that I was trying to explain. Okay, this is really our big trading range, guys. If you ignore this whole debacle right here, this movement, we are almost really just moving sideways between 8,300, which is this trading range, and this EQ, which is $7,600. That's all we're really doing. Okay, we haven't quite gained the strength to move past 8,300 just yet. Okay, clearly when we tried to do that, we got rejected pretty hard within the span of 24 hours or so. Okay, and then we came back to our resting spot, our comfortable position right around the 7,600 area, where we know that there's a good amount of buyers in this particular region. Okay, this is really the region where we have a good amount of demand just set and waiting for us. All right, so this is why we've been coming down to this level over and over again. But remember, like I stated earlier, you cannot keep relying on this area and not have prices reach higher highs. Okay, oftentimes, when you see prices keep tapping this area over and over again, you'll just see it break. Okay, and that's why I stated that you need to get out of this area, as soon as possible. Okay, here's another interesting thing that sort of helped us pull the trigger yesterday on our trades. This was the big, parallel channel that was playing out, and we broke down from it. And I was afraid that this would actually break down further, because not only did we break down from this channel, more importantly, we had broken out of this large structure of higher lows and higher highs, right? So this was the low, this was the high, this was the previous high, and then another higher high created. But we broke that when we started going in this descending parallel channel, and we started breaking down from here. Okay, so effectively we got out somewhere around this region right here, and got out with, as I stated earlier, with minimal losses. Okay, but obviously someone can make the argument that, oh, that was such a dumb idea, why didn't you just wait for this thing to happen? I don't know what kind of crystal ball you have, but there's no way I could have predicted this. Okay, all I saw was the technicals of something like this structure breaking down, this structure being formed, and dragging us down further. Not only did we see that, I stated that on the daily chart we were looking far more aggressively bearish than my comfort zone. Okay, this $7,800 open candle right here got broken, and this candle closed under it. That's the first sign of weakness, at the very least on the daily. And then on the weekly, I stated that we saw a big doji right there, and then a follow-up big bearish weekly, which broke down and closed under the monthly and the weekly pivot. So another huge time frame that was already giving you bearish signals. So for me, it was a no-brainer to just get out, okay, and just wait. Really, that's really all we need to do, is just wait it out, okay? Because at current prices, okay, so here's what's going on right now, okay? You see prices now coming into this region. You can see that there's a strong rejection of this previous channel right here that was giving us, you know, higher lows right here. So from this low, higher low, and now it's using this as resistance because it was previously support, and oftentimes when you see something like this happen, okay, or prices do get rejected like this, you'll try to come down, tap it again, and then get rejected down, okay? I've seen this over and over again, and I definitely don't want to make the same mistake again. All right, so you have some levels to watch, guys. You know exactly you know what to do in terms of waiting for the 4-hour or the daily. You also know about the 21 EMA that we spoke about on the daily, as well as the 30 EMA. So I would say that, you know, be patient. I know it's tough to sort of see big candle spikes like this, and you want to FOMO in, but remember that, you know, these are the candles that you really want to be able to sell into, especially when your overall daily and weekly is looking so aggressively weak, right? So the daily, in my opinion, still looks weak, even the weekly right here. So it doesn't give me any confidence that, you know, these prices are going to break up even higher and higher. I mean, you can also see that prices are now hitting that same pivot that we had on the weekly. Let me see if I can even turn on this pivot right now. Let me show you guys what I mean, okay? Here's that weekly pivot that you can see right now. And look how prices are, you know, coming up very close to it, okay? I wouldn't be surprised if prices breach past this, you know, over the next day and then come back down on the weekly time frame to close under it. Okay, this is really, you know, a large scale time FOMO that happens, especially on the weekly charts where, you know, prices may seem like they're going to spike up really big, but then in the middle of the weekly they just like torpedo down. Okay, so point is, be patient, don't FOMO, and wait for critical levels of confirmation to be broken. All right, give us a thumbs up, guys. I think that should wrap it up in terms of my analysis. I just wanted to give you guys a quick brief overview. I hope it helps. I hope you make some money in this market. Please do share this video, give it a like, give it a thumbs up, or come join the Cryptosomnia community. In the description, the Discord link is just below. When you come in, just come say hi. In the free launch, you will have access to community discussion. But for Advantage members, we get all this analysis that you're seeing right now. Oftentimes, I don't put up daily YouTube videos like this, but I've been doing it for the past few weeks. More often than not, I do Advantage analysis only for the Advantage paying members in here in Bitcoin Analysis channel, which is locked to free members. I do hourly updates or so every few hours, just to let people know how things are going. And then you can have conversations with me in Trader Talk, which is again another locked channel. We hired an awesome stock market analyst right here too, and he's been very active in this channel as well, as you can see. So we have a lot of different channels for whatever your interest is, whether it's trade setups right here that we provide for short terms right here, or for long terms if you're looking for swing trading for on a multi-month time scale, or even on the medium term if you want to trade multi-week. Okay, so, and then over here I just provide trade setups if you guys want to just scalp here and there. Again, none of this is investment advice. I just put up trade setups, and you can see over here some of these trade setups have definitely played out really well. Quick 2, 3, 4% gains, depending on how much capital you play with, can really pay off. Okay, and all this information and these trades, guys, the reviews are available right here. We're not paying these people to write us good reviews, and like I said, right, with all the positive reviews, I'm not afraid to show you my negative ones either. Okay, my losing positions is what I mean. I don't think we have negative reviews. We have losing positions, which I will openly talk about. Okay, I'm not afraid of that because being a successful trader, you kind of have to go through the waves of losing positions like this, guys. That's just a part of trading. That's just a part of life, you know. So Matthew H asks, have you ever sold out to Bitcoin? Yeah, I mean, I sell it from alts, I sell it to Bitcoin often. The way I have my breakdown, Matthew, is I keep about 20-25% of my capital on Binance, and then maybe like a majority of, you know, the 80-90% of my trading capital on Coinbase Pro. Why? Because I like to stick with these alts, BTC, Ethereum, Litecoin, Bcash, and EOS, because they have direct fiat on-ramps where I can just buy with US dollar and sell back into US dollar. I personally think that it's been such a tough market for altcoins that whether BTC goes up or down, altcoins are losing Satoshi value, right? And when BTC goes down, which it has been for the past 10 days or so, more often than not, we see alts devalue even more. Okay, so it's like losing two ways. You lose the alt to Satoshi value, and you lose the alt to dollar value. Okay, so really not a big fan of that. That's why I'm sticking with these trades more often than not. I think that wraps it up, folks. If you have any other questions, please do come join my channel. Give us a thumbs up at the very least. I hope you enjoy this analysis. Share the word and have an awesome day. And again, come join the Cryptosomniac community. Huge education section too if you do want to just come learn technicals, okay? Or if you just want to talk about the stock market or Forex, all right? Take care, guys. Cheers and have a wonderful day.